The first social networking IPO is about to happen, and it's coming out of China. But is investing in Renren a rare opportunity or a serious risk? Renren is China's equivalent of Facebook, and since the Chinese government blocks Facebook, Renren has a huge advantage. The Chinese internet market is massive and growing fast. There are currently 457 million internet users, but that's just a third of China's population. With that, enthusiasm for Chinese internet companies is soaring, and Renren faces a raft of big-time competitors. Tencent is China's biggest instant messaging service. Sina Weibo is China's Twitter, a microblogging service that's exploded over the last year. With just 31 million monthly active users, Renren has some catching up to do if it wants to be the next Facebook, which has more than 500 million active users. It's estimated Facebook's revenues were nearly $2 billion last year. Renren's were just 77 million. The promise of Renren is big, but the big question is, can it deliver? Renren means everyone in Chinese. So is everyone overexcited about Chinese internet stocks? Are we looking at a new bubble in China? Let's bring in Michael Yoshikami, CEO of YCMNet Advisors, which oversees $1.1 billion in assets. Michael, welcome to Bloomberg West.
Thanks, Emily.
So you cautioned investors about this, saying buyer beware. Why?
Well, you're looking at a stock that is going to trade at twice the valuation of Facebook. You're looking at an industry, social networking, which is going to be very much regulated by the Chinese government. You've had people resign from the company because of scandal. We just had a recent report that the claimed 29 million was actually instead 17 million in terms of recent numbers. So we really have a lot of uncertainty related to the stock right now. So if you buy this stock, and frankly, regardless of what I'm saying on a fundamental basis, the stock will probably rise. But you have to understand that in 1999, year 2000 in the United States, stocks actually went up. The question is, will it have lasting power? That's debatable.
That said, given all this enthusiasm, what is going to happen when Renren IPOs tomorrow? Is there going to be a mad dash? I
think there's going to be a mad dash. The rumors are it's very much oversubscribed. It is the first social networking site to go out, and it has two things going for it, two really powerful words: China and internet. You put those two words together, really in a way doesn't even matter what you do. People have been ignoring what the financials look like. They've been ignoring some of the problems reporting-wise, some of the accounting problems, because it has China and internet. They see this huge opportunity, and people want to get in.
All right, well, Michael, let's talk about some of those issues, or the accounting issues of this company. I mean, I've never, ever seen a company the day before they go public, the head of the audit chair, the chairman of the audit committee, that's like the quits right before the IPO. That's like the school teacher quitting when she's supposed to be grading papers.
Yeah, it's very problematic. I mean, I think it goes to show you the froth that we have in the markets right now. People are actually really just overlooking it. In fact, you actually see news reports that maybe it really wasn't problematic. Maybe more so some of the problems the company has is they're just growing fast. Some of the executives don't speak such great English. I mean, we're talking about investing literally hundreds of millions of dollars into this stock, and investors are overlooking all of that. So it's fairly unprecedented, and I think, again, goes to the euphoria or the frenzy that people have for social networking stocks at this point.
Michael, is there anything else you saw in the prospectus for Renren that gave you pause, whether it was a prospectus or the amendments to the prospectus where some of the numbers changed as they went forward?
Yeah, well, first of all, if you read the prospectus, and most investors probably don't read the prospectus, I did read the prospectus, and when you actually look at the challenges that they talk about, some of the challenges they actually describe is maybe some of their technology is not so proprietary that they might be in litigation in future years with companies, say, like Facebook. They also talk about the challenges in dealing with China, as well as the challenges from an accounting standpoint, and they have readily admitted that they have already found massive flaws in their accounting systems, which is, I think, indicative of some of the stumbles we've seen in this IPO. But again, remember, it has China and it has internet, so in all likelihood, the stock's going to go up. The question is, after you're in the stock for a short period of time, how's it going to do for a long period of time? That's something investors need to ask themselves.
Chinese internet companies fell pretty sharply in trading today in the U.S. Sina down 9.5%, Baidu down 7.4%. What kind of a sign is that?
Well, you know, it depends on what you think the reason is. Some are speculating the reason those stocks went down is that money is going to migrate out of those stocks into social networking, into Renren, for example. But I think it really is indicative that these stocks are trading at very, very high valuations. And granted, while the Chinese internet population is growing significantly, I think we are going to have challenges in valuations when valuations just come back. If you think about it, Facebook, and we cover Facebook very, very closely. We know the financials very closely. If you look at what's happening with Facebook, this company is coming out at twice the market cap at Facebook. And people are actually saying Facebook is fairly richly priced right now. And I think if you look in the Chinese internet space, most Chinese internet companies are priced with those same type of valuations. So 9–10% correction, it's a drop of a hat. It's nothing compared to what could happen to these stocks if they disappoint on the revenue side.
And Renren just replaced the head of its audit committee very last minute. I mean, how much of a concern is that? And concerns about fraud in general, given the fact that in the Chinese market, there's not a lot of reliable data about users?
Well, we have very sophisticated investors. Hank Greenberg, formerly of AIG, actually invested in a Chinese company, turned out to have fraudulent numbers in terms of the amount of business they were actually generated. How much of a concern is it? I think it's a huge concern. If you're an investor that's concerned about governance or you're concerned about really fundamental investment strategy, it's a massive concern. But if you love two words, China and internet, you buy the stock anyway, and it goes up. And in all likelihood, that's what will happen to this stock.
Bubble?
I think it's as close to a bubble as you possibly can get. This very much reminds me of 1999, 2000 in Silicon Valley. We were in the heart of Silicon Valley to see all the carnage. We saw stocks come out. People were crushed if the stock only went up 40% on the first day. I think we're in a situation right now where you have huge opportunity. Granted, the internet was huge opportunity before, but huge opportunity doesn't translate into real business results. And that's the difference we have to really watch for when looking at fundamental analysis.
Carnage, that is a strong word. We'll be watching to see if you are correct about that. Michael Yoshikami of YCM, thanks so much for joining us.
Thank you very much.